Now turning to our program, please welcome Jamie Reeve, Senior Vice President of Wealth Strategies at Northern Trust, to introduce today's speaker.
All right, is it fun? I like that. I think I can subscribe to that. I'm going to keep it short and sweet. Many of you will recognize our good friend, Mr. Michael Antonelli. He's presented now. Today will be his third time, though today it's the first time talking about cryptosporidium. Who knew that the market strategist from Baird was also pretty good at things like Dr. Bob would love to study for hours? But cryptosporidium, is that right, Mike? Oh, it's a different crypto. All right. Mike is a father of two very talented swimmers, Whitefish Bay. He actually bought Dan Valite's house. He and his wife have lived here since the early 2010s. He's been with Baird ever since. You might subscribe to his social handles where he's known as Dad in the Bay. He's the writer of Baird's Bull and Baird. So please welcome to the stage non-cryptosporidium expert, Mike Antonelli.
Thank you so. Is this on? Thank you so much. Yeah, this is my third time speaking, and if anybody's ever seen me before in the Milwaukee Rotary, I think I did something on demographics. I've done the economic updates, stuff like that. I'll let you know that right now the stock market's at an all-time high. Did you guys know that it is? So if you would come and listen to me, well, I mean, there you go. I have something fun for you today. I heard that you guys had some interest in learning a little bit more about crypto. I don't call them currencies. You ever heard the word cryptocurrency? I think that was the biggest mistake that they made when they were marketing these things. They're not currencies. Nobody uses them as currencies. They are crypto assets. And we're going to discuss a little bit about the biggest crypto asset. We'll discuss a little bit about some of the other crypto assets. But my goal here for you today is not to say, aha, I get it 100%. Okay? Because this is going to take some time. If you're just new to this or if you're thinking about what these might mean, it's going to take some time. Okay? These things are complicated. They're a little bit esoteric. You may be like, I still don't get it after this, but hopefully when we get through this, you have some idea of what they are. And I'm going to try to go really quickly here, no more than 10 to 15 minutes here in case there's any questions. So let's just start first with what is Bitcoin? We're just going to talk about the biggest crypto asset, Bitcoin, to start, because I don't think there's any reason to go into there's something like 16,000 different crypto assets. We don't need to go into all 16,000. This is the one that tends to dominate most conversations. So we're going to go into this essentially as the crux of our understanding of crypto in general. So what is Bitcoin? Well, in 2008, someone named Satoshi Nakamoto. Okay, they have no idea who this person is. It's just a name, kind of a mythic figure. Nobody can specifically point to who this person is. Decided that he or she or they had an idea for a payment app, a way to pay people money. Okay, that's it. They wanted to be able to pay people money. You owed somebody money, you're just going to pay them. But the idea was based on technology, software, and what's called a decentralized blockchain. And we'll talk about what that is in a second. But first, before we understand like what a decentralized blockchain is, what Bitcoin ultimately will become or what it is now, just remember, it started as a way to just pay somebody money. That's it. I owe you money. Instead of giving you cash or using Venmo, I would just use Bitcoin. That's all it was meant to be, a payment app. So what are the different kind of ways, my friends, that people can pay each other? Let's just go forward here one. Think about this, okay? There's two ways to send money, okay? Let's say Alice owes Bob money, okay? Alice owes Bob money. Let's say Alice owes Bob $100. In our current system with a bank, that's what's called a centralized system, right? The bank holds the ledger, right? Think of a ledger as a giant book, okay? Every bank out here has a book in the middle of its bank called a ledger. And it's got all the accounts in it, right? Here's all the accounts. Here's how much money they have. That's it. That's a centralized system. So Alice goes to her bank, BMO, JP Morgan, PNC, whatever, all of them, and says, send Bob $100. The bank opens the ledger and says, yeah, Alice has 100. Send it to Bob's account. We all agree? Centralized way to pay somebody money. Another way would just be to Alice could hand Bob cash too, right? That's kind of outside the system. Like, remember that kind of outside the system. So Bitcoin was created to say this. If that ledger, okay, that one ledger that sits at a bank, If something happens to that ledger, if it gets corrupted, if it gets lost, if something happens to it, how do we know what the accounts are? How do we know who has what? What if the bank loses the ledger? What if the ledger becomes corrupted? There's only one ledger the bank has. In this system, in the Bitcoin system, instead of one person holding a book with all the accounts, a bunch of different people hold the book, okay? A bunch of different people hold that same book. And they talk to each other constantly and say, do you agree? Does everybody's accounts agree? Do we agree? Have there been any transactions? Do we agree? That would be a decentralized system, right? No one person holds the ledger, a whole bunch of people hold the ledger. So Alice goes onto her Bitcoin app and says, I owe $100 to Bob. I'm going to send him the equivalent in Bitcoins, okay? And Bitcoins, by the way, you don't have to do one, you can do down to like 0.001. So they don't have to be traded individually, okay? What happens then? Instead of one person opening the ledger and saying, yes, she has it, send it to Bob, the whole computer system looks at their ledgers and says, yes, she has it. We all agree she can send it to Bob. That's it. Instead of one person holding a book, hundreds and thousands of people hold the same book. That, my friends, is just a blockchain. That's it. It's just a blockchain. It's a bunch of different computers all holding the same book, asking each other, do you agree? Do we agree with these transactions? Do we agree with these balances? Why would this be better than the original version? It should be obvious, right? Why would this be better? Because it's more robust, right? More people hold the ledger. If only one person held the book and the book disappeared, what would happen? It would be chaos, right? In this system, everybody holds the same book. And that, my friends, is just the definition of a blockchain. It's a bunch of computers running the same software program, agreeing with each other on payment. That's it. That's what Bitcoin is. It's a payment app on a decentralized network instead of one book. And you might be like, I still don't get it. But that's as easy as I can explain it. I'm not sure you can find a more simple explanation than that. If you can, I want to go to that event. It's a bunch of computers running the same program, agreeing with each other to send money back and forth. It's just a payment app. That's it. Now you might ask yourself, where do the Bitcoins come from? Where do they come from? Are they minted? Do they fall out of the sky? Do they exist? Where do they come from? That, my friends, is what we're going to talk about next, okay? So, hopefully this works. Okay, there we go. Think about this. What would be the reason to leave your computer on in that system, okay? Say you agree, you have a computer in your house, and you want to participate in the system. But what do you have to use to participate in the system? Power, right? You have to use power. You have to leave your computer on. If all the computers turn off, there's no way we can tell what transactions are happening, right? All the computers have to be on. So what's the benefit? What's the reason to leave the computers on? Well, think about rewards in a system, okay? Each person leaves their computer on and tries to basically solve a problem, solve a formula. And as they're solving this formula, transactions are happening. People are buying and selling Bitcoin. People are sending money to each other, okay? Somebody has to take all the transactions and put them in the book, right? Otherwise, how would it get in the books? Say 5 people that day decided they were going to send money to each other. That needs to go in the book, right? We all agree? Otherwise, the ledger's going to be out of balance. Everybody's competing to put the page in the book. Everybody's competing to take those transactions and put it in the book. How do they do that? They solve a cryptographic formula. And that's as easy as I can explain that. But I'll try it in a different way. Imagine there's one person at a gambling table, okay? And they have 1,000-sided dice. 1,000-sided dice. And they have to roll a 10. How long would that take? Right? Maybe it takes 1 minute. Maybe he rolls a 10 right away. Maybe he or she rolls a 10. Maybe it takes 10 minutes. Maybe it takes half an hour. But the goal of that person is to roll a 10. That's it, on 1,000-sided dice. Now, what happens when more people show up to the table? And we tell 10 people, hey, somebody roll a 10. Does it become easier? It should become quicker, right? We're going to get to the number 10 quicker, right? Say 1,000 people come to a table with 1,000-sided dice and they have to roll a 10. It becomes quicker, right? That's the Bitcoin algorithm. If more people are in it, it becomes harder to roll that number. Instead of rolling a 10, now you have to roll a 1. And if less people leave the table, instead of rolling a 10, maybe you can roll some number between 15 and 20. So essentially what I'm trying to say is that the people that are competing with each other are playing a game, trying to solve a formula, to just take a bunch of transactions and put them in the book. And when they succeed, they get awarded a Bitcoin. And right now, the reward is, I believe it's 3 Bitcoins. If you succeed, you get 3. Okay, they're $117,000 each right now, $115,000 each. So is there an incentive to play the game? Is there an incentive to leave your computer on to try to solve this formula? If you win, you get $350,000. There's an incentive, right? So that's why people leave their computers on. That's why the system continues to work. But again, the Bitcoin in and of itself is generated when somebody solves the formula, adds a bunch of transactions to the ledger. All the other ledgers say, you won, you're right. We'll add the same page to our ledger too. And then the book keeps going. That's it. That's the whole history of how Bitcoin exists. And these Bitcoins can be traded on an exchange. They have value to them. We'll get to that at the end, because that's the part where you guys are like, wait, what? How's that possible? Let's talk about some other things just really quickly. What are stable coins? Anybody ever heard the term stable coin? Maybe some of you have. So Bitcoin, we just said, is a reward for just adding pages to the ledger, that payment app. That's all it is. What are stable coins? Well, if you and I, in the traditional world, were to put our money into the crypto world, what can we put it into? We can put it into Bitcoin. We can put it into something called Ethereum. I'll show you a bunch of these. There's 14,000 of them, okay? We can put them into a bunch of these different currencies, crypto assets. What if we don't want to risk our money? What if we don't want it to go up and down like a stock, like Apple? What do you guys do with your money when you don't want it to be an Apple or IBM or whatever? What do you put it into? A money market fund, right? Or a treasury bill or something, right? So it's just very stable. It's just the dollar. Stable coins exist in the crypto world to just be money market funds, to just be treasury bills, so that they don't go up and down in value. Their goal is to be pegged to $1. Their goal is to get people to just be able to tread water in the crypto world, not have to go back and forth. How does stable coins remain at $1 exactly? Well, here's the interesting part, and the real kind of questionable part if you're a little bit like nervous in this realm, which you probably should be. The biggest one is named Tether. Tether is the biggest stable coin. Their goal is to remain 1-to-1 with the US dollar. Tether claims and has been audited to hold treasuries and cash and gold and other things to maintain the peg, right? If we have $100 billion in Tether, we have $100 billion in treasury bills. That's their goal. We're matched off. If somebody redeems, we redeem. Do you believe them? I mean, they've been audited. The $1 peg hasn't been broken, but it's one of those things that ends up being kind of a trust thing that Tether's going to hold on to that amount in the back. But if you are Tether and you have $100 billion in this money in your stablecoin, you're paying no interest on it. There's no interest on these things. You might get some interest in something called staking, but we're not going to get into that. What if you could get 4% in treasury bills? That's a pretty good business, right? You take in $100 billion, you put them in treasury bills. That's a great business if you're paying no interest. So stable coins are ways for people to just enter the crypto world and have it just sit. Think of it as just like a money market fund, or think of it as just a way for it not to be risked in the market. So, all right, let's move on. All these things are traded on crypto exchanges. There are multiple crypto exchanges. Coinbase is a crypto exchange. Has anybody ever heard of Coinbase? Coinbase is a publicly traded company. Coinbase is where consumers and investors go to buy and sell crypto. It is a publicly traded company. There are other ones like Kraken, and there's another one called Binance. They're just names for exchanges, okay? Just like the New York Stock Exchange, or the NASDAQ, or the American Stock Exchange. They're just different exchanges. And I said there are a lot of these cryptos. Let me just go over. Can't see it really well on here, but I essentially picked the top 15 that I could find by market cap. And I put them in that red box. This is where your eyes should glaze over, okay? This is where you should probably be like, okay, because the number 12 one is called chain link. The number 14 one is called Sol. The number 15 one is called Avalanche. The number 9 one is called Tron, which was a great movie, by the way. When I was a kid, Tron, that was a great movie. The number 1 is Bitcoin, right? This is by market cap, so the size of the currency. Think about a stock, which is just the stock price times the number of shares out, same thing. How many coins are out? What's the price of it? The number 1 is Bitcoin. It's worth about $2.2 trillion. Is that a lot? Is 2.2 trillion a lot? Ask yourself that. Does anybody know what the market cap of the United States stock market is? Some of you probably do. You know, the United States stock market is the biggest stock market cap in the world. You guys all know that, right? Of course. It's about 36 trillion. All the US publicly traded companies is worth about 36 trillion. So is 2 trillion a lot? I mean, maybe, but not really. Gold is worth way more than that. The collective real estate in the United States of America is worth way more than that. 2 trillion, point I'm trying to make is it's not that big in the grand scheme of things. If Bitcoin would go to 0, would it cause a crash in the US economy? I doubt it. I doubt that it would. It's just not that big. Ethereum is number 2, Ripple is number 3. There's Tether, you see Tether up there? That's number 4. They have 170 billion in, like I said, in assets. What are these other things? We don't really need to dig into them, but Ethereum is just another, instead of being a payment app, people use Ethereum to create their own decentralized apps, which is just a way of saying, if you were to run a business and you wanted to have some tokens on a crypto exchange, or I'm sorry, on a crypto blockchain, you would probably use Ethereum over Bitcoin, because Bitcoin's just a payment app. Okay, that's all it is. We're gonna get to the part at the end where we really riff for a little bit, okay? Where we try to bring this all together. How do people invest in cryptocurrency? So at Baird, we are very thoughtful about this issue. We struggle with the regulations around it. We struggle with the clarity around customer safety. We're very cautious about cryptocurrencies. So Baird is one of these places that is trying to be as thoughtful as we can as this evolves. Let me tell you a story. But first, let me just say, how do people invest in cryptocurrencies? There's a couple different ways. And I'm not soliciting for you to buy cryptocurrencies. I'm just telling you how people do it. I'm not trying to convince you to do this, because I own 0, okay? You can go to an exchange like Coinbase. You can open an account, and you can buy and sell crypto on it. You can buy and sell Bitcoin. It is taxed almost like a stock, right? Short-term income, short-term gains, long-term gains. It's taxed essentially like a stock. So you can go to Coinbase, open an account. Coinbase is a publicly traded company. Or you can buy ETFs. There are ETFs that exist now on cryptocurrencies. But remember, if you buy an ETF, you're really not getting one for one. Like if Bitcoin goes up $1 and you buy an ETF, you may not get the dollar because of how ETFs work with fees and rollovers and all these futures contracts they use and swaps and stuff like that. So just because you buy a Bitcoin ETF doesn't mean you're going to get the exact one for one of Bitcoin. Let me tell you a quick story. I got 2 stories. I'll tell you a story at the end too. I was an early investor in Bitcoin. In 2012, I bought 2 Bitcoins for $350 each, roughly. Because I thought, you know what if this is something one day? Like, I see some of my friends buying this, like, what if this is something one day? Should I buy this? And I did. My friends, I did. I bought 2 of them. I spent like $700. I'm like, what's 700? Like $700 is I'm not going to die if I lose $700, whatever. So do I have a Ferrari sitting up front? Because they're worth 117 each right now, right? So that would be a Ferrari. No, I got them stolen from me. They were just stolen. I didn't know anything about cryptocurrencies, crypto assets. I knew nothing. I bought them on some exchange that apparently was a trading card exchange before it was a crypto exchange. And somebody just went into my account and took them. That's it. And I lost them. And then you know what? I bought another one. In 2015, I bought another one on an exchange in the US. And, well, here's the thing. I lost that one too. Stolen. So my experience with crypto has not been all that great. And it reminds me not to delve into things that I don't understand, like my daughters and landscaping and I don't know, like, you gotta kind of stay in your lane, you know what I mean? So I lost both of my investments. And that's the thing with cryptocurrencies, and I think why Baird is so cautious about it, is how do you custody it? How do you make sure it's safe? How do you keep it from hackers? How do you keep it from a government interventions? Like, how do you keep it safe? There are smart people that do. You can pull these things off of the exchanges and put them on little USB drives, but if you lose the password, it's gone. There's actually a story of a guy who pulled off like something like 3,000 Bitcoins, put it on a hard drive, threw it away. You can Google this. Threw it away. This thing would be worth like, I don't know, $1 billion, more than $1 billion right now. He called the city garbage dump and requested to just comb through the dump. I kid you not. Comb through the dump looking for the hard drive. And this like went on for a long time. It's the craziest story. So that's how people invest in cryptocurrencies. You can buy it directly from exchange. You can buy it through ETFs. But I caution you to heed my story that this is not easy. Like buying an ETF, nobody can steal an ETF, right? I mean, that's different than actually owning the currency, the crypto asset on an exchange. Remember this. Say you go to Coinbase and you buy $1 million worth of Bitcoin on Coinbase. Do you actually own the Bitcoin, or do you own a liability on their balance sheet? Because I don't think you actually own the Bitcoin. You own a liability on Coinbase's balance sheet. What if Coinbase goes under? Now you're in line with all the creditors. Unless you're smart enough to pull it off of the exchange, which I don't know how to do. That would be a whole nother level. So, okay. Now let's riff. Okay? Now let's riff. I think that's as easy as I can make it, my friends, about what it is. You might still say I have no idea, and that's fine. Okay? That's completely fine. Like, I don't understand nuclear physics either. If somebody came up here and explained nuclear physics, I still wouldn't understand it. I get it. It's a payment app. It's decentralized. And the reward for leaving your computer on is Bitcoins. Those are traded on exchanges. That's it. Why are they worth $117,000? That might be what you're wondering. And I'm going to pose this question to you. Why is anything worth anything? Why is anything worth anything? Why is my house in Whitefish Bay worth whatever I think it's worth? Is it? It's a house. It's something I could live in. Somebody could live in. But what's it worth? It's worth what somebody will pay for it, right? And that's it. It's just worth what someone else will pay for it. Who determines what art is worth? Who? Why is one piece of art worth more than another? Is it society? Is it supply and demand? Who determines it? Just the market, right? Why is the dollar worth what it's worth? So the point of me riffing on why anything, diamonds. Why are diamonds worth what they're worth? It's a rock. They dug it out of the ground. It's shiny, but it's just a rock. Why is it worth anything? Who decided what it was worth? De Beers. No, I'm kidding. Society, right? Didn't society decide what a diamond is worth? There's supply and demand. You might say, well, I don't understand the digital nature of it. When you go to your brokerage account and you buy a share of Apple stock, how do you hold it? How's that held? It's held digitally, right? Isn't it just an entry in a database? You don't own the share. You hold an entry in a database. What's the difference? What's the difference between that and a digital asset? Now, here's something that I've just really come to grips with when I've tried to grapple with this, because I think the best explanation of this is honestly that it might be a bit like a religion. Honestly. Its best analogy might be a religion, because it's got a mythic figure that kind of started it. It's got disciples. It's got people who just love crypto and who kind of go all around the world talking about crypto. It's something that a bunch of people believe is to be true. And you know what? Is that not the most powerful force in the universe? If a bunch of people believe something to be true, is that not super powerful? It is, right? If a bunch of people believe that a crypto asset is true, then maybe it is. You can say it's not. You can short it. You can say it's worth zero. You would have been bankrupt by now. You could say it's worth zero. You don't have to care about this. What do people that like this really get involved in? They like the fact that it's outside of the government. That's it. They love the fact that this whole thing is outside of governments. And I think those are the biggest proponents of crypto, Bitcoin in particular, right now. That the Federal Reserve can't print it, that inflation can't touch it. It has become this quasi, I don't like the monetary system, I'm going to play in this system instead. That is what it has become. But the way you should think about it is just a small cap software stock. Because that's really all it is. People buy it because they want the number to go up. That's it. Nobody's using these things for currencies. You will never buy a Starbucks with a Bitcoin. You'll never transact a home with a Bitcoin. Okay? You never, ever will. These things have just become assets that people have believed exist outside of the government system. And remember, there is value here, right? How can you pay somebody outside the governmental system? Say you owe me $1 million. How can you pay me outside of the banking or government system? You can pay me in cash, right? What else? I mean, you could kind of, I don't know, give me a piece of art or something. You could give me some sort of physical good. You could also pay me in Bitcoin, and that would exist outside the system. Say you live in a war-torn nation or a communist nation and you want to get some money out of the border. How do you do that? How are you going to get your money out of the border? You going to wire it? Think the government's going to let you wire it out? Hey, can you send this $5 million over to the United States? But you can with Bitcoin. So now you can transport money across borders with the government's not able to track it. What else could you do? All sorts of illicit activities, right? You could do all sorts of illicit activities with Bitcoin too. And that's kind of the biggest complaint about it, is it could be used for all sorts of negative activities. Let me just end with one more story, then it's 12:55. I think that's plenty. I just want to end with one more story, and then if somebody wants to ask questions, I'm happy to answer one. Bitcoin and cryptocurrencies remind me of a very important lesson that you need to learn right now about yourself, okay? Let me just use this story. There was a man named T.H. Hollingsworth who was a British demographer, okay? T.H. Hollingsworth, and he studied Britain in the 1600s, okay? Britain in the 1600s. And here was his study. Who tends to die first, rich people or poor people? Okay, that was his study. 1600s Britain, who tends to die younger, rich people or poor people? And remember, let's do Britain in the 1600s really quickly. If you get a cut, you're dead. Okay? There's doctors in here. No doctors, no Advil. If your back hurts, you're dead. Okay? Britain in the 1600s is not an easy place to get sick. Earache, whatever. So the study was, who tends to die first, rich people or poor people? Who tends to die younger? What is it today? Like, what is the answer today? Who tends to die younger, rich people or poor people? Poor people, right? We know that for a fact. Like, that's access to medicine, education, doctors, all those kind of things. So what the T.H. Hollingsworth, this British demographer, found in the 1600s was that it was reversed. It was reversed. Rich people were dying before poor people. Does that make any sense to anybody? Well, here's what he found. And that's why the lesson that I'm going to tie into this cryptocurrency for a second when I'm done. Here's what he found. When a wealthy person in the 1600s got hurt, like an earache or a scratch or something, they had the means, they had the money, the capacity to go into town and try to buy a cure. They were going to town and try to go to a witch doctor or a shaman or somebody who would sell them something to put in their ear, or something to put on the scratch, or something to help them with their cough. And more than likely, they were being sold poison. They were being sold something that was basically snake oil. They were being sold something that would kill them, more than likely, instead of heal them. But they had the means and the capacity to do it, and that's why they were dying on average for poor people, because poor people were they didn't have the ability to buy that. Why is that important for you now? Well, here's why I think it's important for you now. There's never been a moment in your life, in my life, everybody's life in this room, where there's been more financial charlatans in the world. Financial charlatans in the world right now, who prey upon rich people constantly. If you were to open your email right here, all of you, and you were to look through your personal email, I bet you would find an email that says, hey, click this link, we owe you $842. All you have to do is input your information and we'll send you your money. Or I got this one from Geek Squad that said I owed $600 for a Geek Squad. Did everybody get the Geek Squad one where it says just you owe us $600, here's your bill, please wire it? there's never been an easier way to access you or your family or your brothers or sisters or anybody else or your parents to try to perform charlatan acts on you, financially especially. So I want you to know when it comes to cryptocurrencies, okay, when it comes to these things, it's never been easier for somebody to just pop up to you and be like, hey, do you want to buy Fartcoin? Hey, how about, do you want meme coin? Like, it's never been easier to show up in your inbox and say, hey, the stock market's only up 12%, but Dotcoin is up 18,000%. Do you want to buy some Dotcoin? And retired people at home see that in their email and they're like, Dotcoin sounds pretty good, actually. That seems amazing. And just like the Britons in the 1600s, they are being preyed upon. So I'll just wrap up by saying this. You don't have to care about crypto assets. You don't have to care about Bitcoin. The thing that I've learned in wealth management, and especially at Baird, where I try to teach this to all our customers, is that the greatest skill you could ever have as an investor, the greatest trait you could have as an investor, number one is patience, but number two is a lack of FOMO. Does everybody know what FOMO is? Fear of missing out. The greatest trait an investor could ever have is a lack of FOMO. To not look at your neighbor and be like, oh, he's getting rich on Bitcoin. Gosh, I really want to get in with it. To have that lack of FOMO probably is the best thing you could possibly have. And you know what? I experience it too. I think we all do as human beings because we have emotions. We're very prone to greed and fear. And I think it was JP Morgan said there's nothing more toxic to you in the world than seeing your neighbor get rich. There's nothing more toxic than seeing your neighbor get rich because you think to yourself, what am I doing wrong? Why are they getting rich? So you don't have to care about Bitcoin. My intention here was just to show you essentially that Bitcoin's just a payment app on a bunch of computers that are decentralized. People trade them. Why are they worth 116? Because why is anything worth anything? It could be worth 50 tomorrow. It could be worth $1 million tomorrow. I have no idea. I didn't think NVIDIA would be worth what it is. It is. NVIDIA is bigger than the entire nation of Canada. NVIDIA is bigger than the entire Canadian stock market. Should it be worth that? I don't know. They make graphics cards. AI is pretty cool. Why is anything worth anything? I think that's the question you have to grapple with when you think about cryptocurrencies or stock prices or your home price or whatever. You have to grapple with the fact that society is really bad at figuring out what things are worth. It just is. But don't be closed-minded to the fact that new things can exist. Okay? The new things can exist. You know what didn't exist for the longest time? A stock. You know what didn't exist for the longest time? An ETF. You know what didn't exist for the longest time? Retainers. Like, new things happen all the time. It's okay. New things can be created. You don't have to recoil at the world changing. I think the best people I've ever met accept that the world moves fast, new things happen, and that you don't necessarily have to be in Bitcoin. I am not. I invest in the S&P 500. I invest in Baird. I invest in a couple companies. Like, I don't own any Bitcoin, A, because I got burned, and B, I don't have any sense of FOMO for it. I just don't. I can get all of my goals done with my current financial plan. I don't need it. I don't need Bitcoin. I don't need 1986 Mouton Rothschild, though I would like it. So please, if you walk away from this, I hope you got a little bit of education, maybe a laugh or two. You remember the story about the demographer. I think that's a really, really important point because people will prey upon you if you're not careful in this day and age, and your email is just a conduit to that. So, okay, thank you guys so much.
Thank you for speaking with us today, Michael. If you have a question, please come on up and start your question out with an introduction.
Hi, my name is Teresa Esser, and by way of introduction, I'll say that when I was an undergraduate, I had an opportunity to work with a history professor, and she had me read copies of the Lancet from between 1833 to 1873, because in her opinion, 1873 was the year that medicine turned the corner from doing more harm than good and to more good than harm. So thank you for that parallel. I wonder if, in your opinion, there is a time in the future, then there's two things going on. One, the tulip craze. Tulips are worth very little today.
Yep.
But, they're pretty. Do you think there will be a time when we'll have more, the more harm than good to more good than harm, that will turn that corner? Or do you think it'll go to the tulip situation?
So you're basically asking, is it a bubble? And that's a good question. I wish I could tell when bubbles happened. I wish I could tell like what the common parts of them were. Certainly greed and FOMO are huge parts of what create bubbles. Again, this notion of seeing your neighbor own tulips and them getting rich, and same thing with Bitcoin. Here's what I have to say. It's been around since 2008. It's been around since 2008. So this thing's been around for a while. Like, that's a long time. If it was a pure bubble worth nothing, shouldn't it have popped by now? Right? That's a long, long time. Like, most bubbles don't last, that many years. So I don't think it's a bubble at this point. What it's worth, I don't know. Like, I don't know whether it should be worth $117 or $1 million, or it should be worth $50. I know it does have some use. There is use for it. We can't just say that there's no use for it. It is a way to pay somebody money. It is a decentralized way to pay somebody money. It's a decentralized way to move money across borders. That has to have some value. I don't know what that would be, but it has to have some value. And again, I think the notion that it exists outside of governments has become this powerful backing to it, that the governments can't manipulate it, the governments can't print it. We all worry about inflation. We see it every day. The Bitcoin proponents seem to believe, and I don't necessarily agree with them here, that it's an inflation hedge. That if you just own that money, it's a hedge against inflation, but I don't think that's necessarily the case. I view it as a new way of thinking about money, but I'm not sure whether it's a bubble or not. But if it was a bubble, I think it would have popped by now. I just think it would have imploded already. Because remember what Bitcoin has been through. Bitcoin has been through 2022 when we had a huge inflation bear market. It went through COVID. Bitcoin went through COVID when the entire global economy stopped. Why didn't it collapse then? You know what I mean? So I don't think the right answer is that it is definitively a bubble, but I think that if it was a bubble, it would have collapsed already.
Hi, Megan Holbrook. I feel like I can program the clock on the VCR now, if I wasn't able to do that earlier. But given your security issue that you faced, what do you think about the cryptography that protects the blockchain itself from being poisoned?
Yeah.
So if Alice sent Bob $100 and Bob said no, she sent me 1,000.
Yeah.
How do you prevent that from happening?
Yeah. So I think the question is two things. One is like with the security around the Bitcoin protocol, and number two, like, no, I sent her 1,000. The thing that is decentralized avoids the second part, right? If she says, I sent you 100, and he's like, no, you sent me 1,000, all the different computers would have said, no, it was 100, right? Because all the different computers saw the order. So there's no way to lie, right? As opposed to in a bank where you can say, hey, she sent me 1,000, no, it sent me 100. All the computers would agree that they would just look at the entry on the code and say, yeah, it was 100. What is the security around the Bitcoin protocol? They say that it's as secure as any protocol that's ever existed, right? That it would take quantum computers 1,000 years to figure out how to break the protocol. That stuff is way above my level of like IT security expertise. But I do believe that if, I assume that the governments of the world, like the rogue governments, are trying to corrupt this thing all the time, right? I would assume all the bad actors in the world are trying to corrupt this thing, and they haven't been able to. So I think that the security of it is, and again, the fact that each computer has a ledger on it, so if something happened, you could shut it down and just say, all right, who had the last ledger, and reboot from there too. So I think that there are some protocols that really back it.
Thank you. My name is Fred. I don't have crypto, but so I have two questions. One is, do we worry about what we're told to worry about, or do we actually have the right worries? Are we really worried about inflation? Are we really worried about not being in crypto? But then, are there any legitimate payments being made in crypto? You're focusing on Bitcoin.
Yeah.
Tether trades 80% of its value every day.
Yeah.
Are those legitimate payments? Are those corrupt, payments trying to be hidden? And is there security in any of the other crypto environments?
I mean, there have been coins that have fallen apart from, there have been other cryptocurrencies, crypto assets that have fallen apart from lack of security or security protocols that were not as good as Bitcoin. In terms of the payments that go to Tether, think of Tether as like the bank, right? So a lot of these payments are just people going in and out of Bitcoin or in and out of Ethereum or in and out of some of the other crypto assets. Whether those are authentic or whether are you saying whether they might be like criminal enterprise or something like that? Since all these transactions are anonymous, it's really impossible to know, right? How much is legitimate commerce and not. But remember, the Bitcoin ETFs that exist that are sponsored by, I think State Street might have one of them. Somebody has, maybe it's BlackRock that has one of them. They have to transact in Bitcoin also, right? In the ETF. So people sending money back and forth, that kind of thing. So the country of El Salvador actually made Bitcoin their main currency at one point. I don't know if I told you guys that. The country of El Salvador made Bitcoin their main currency for transactions, but they found it just didn't work. It just didn't work, so they abandoned it to go back to a dollar peg, I'm pretty sure. But it's a question I can't answer. I don't know how much percentage of that transactions every day are like authentic and how much are just like people moving money around for nefarious purposes. I think it's not knowable.
Hi, Mike. Steve Chevalier. That's one of the best explanations I've heard of Bitcoin ever, or crypto.
Thank you.
You live in a very regulated world in your business.
Yeah.
So if the United States government, which I believe has the ability to regulate anything and everything, decided to regulate crypto, would they be stopped because of the worldwide market that seems to be there?
Probably, yeah. That would be my guess. But remember, like, President Trump has actually come out in support of crypto. They have been pushing for laxer regulations. President Trump and his entire administration have been kind of supporting crypto and its growth in the U.S. If a new administration decided to make it illegal, two things come to mind. Number one is it's worldwide, so you just couldn't stop it, right? These computers exist all over the world. You could make it illegal to, I don't know, transact. You can make it illegal to bring money from Bitcoin into a U.S. bank account, maybe something like that. But here's what I think, and this is maybe more of an esoteric point. The longer that crypto exists, the more people are going to support it, okay? Just the longer it exists, the more people, young people in probably in particular, will support it. The more young people support it, the more that they will vote for people that support crypto. And the more that they vote for people that support crypto, the more crypto becomes like. See, that circle is happening, right? That circle will probably continue to happen. And I think with President Trump accepting crypto and President Trump talking about wanting to be the crypto capital of the world, that puts a big tailwind into it. It really does. It puts a massive tailwind into it because you have an entire political party who now supports kind of the growth of this new asset class. So, all right, I'm going to call it. Thank you guys so much.
Thank you, Michael.
Appreciate all of you.